Hello everyone, I'm CA Divyangana Aneja and I will be the moderator for today's session. We are delighted to welcome you in the 20th VCM of the series, Beating the Monday Blues, being organized by the Continuing Professional Education Committee of ICAI. Continuing professional education is a means by which members of the profession maintain, improve, and broaden their knowledge, skills, and develop qualities required for sustainable growth. The ICAI has been providing continued inputs to its members through seminars, lectures, workshops, technical literature, e-learning, web-based training, etc. The CPE committee of ICAI has also launched a 360-degree learning series, Wednesday Words of Wisdom, on every Wednesday, focused on updating core areas of CA practice. Hence, we heartily welcome you in this VCM on IBC, recent changes in CIRP and liquidation regulations, and search and seizure under the Income Tax Act. Our eminent speakers will talk about two emerging areas of professional interest. First, amendment to CIRP and liquidation regulations as on 30th September 2021. And second, search and seizure under the Income Tax Act and retraction of statement. We have an announcement from the CPE committee of ICI also. On occasion of Dhanteras and Choti Diwali, the CPE committee will not have its VCM session on 3rd of November 2021. Post that, on 8th November and 10th November, the programs will play as per schedule. We now invite the chairman of Agra branch of CIRC of ICI, CA Ashish Jain, for welcome address. Welcome, Ashish ji.
Thank you, Divyangana ji. Thanks a lot. A very good evening to all the members of ICI, learned faculties for today, Manoj ji and Amit ji, who are kind enough to spare time for this technical session. My colleagues in the managing committee, CA Gaurav Bansali, Vice Chairman Agra Branch, and CA Deepika Mittal ji, Secretary Agra Branch, for helping us out in organizing this event. And all members of ICI. As already said, CPE committee has been very active and very vibrant in organizing seminars for the growth and learning of the members. And rather, I would say CPE is not continuous learning. Continuous learning is like continual learning for the members, because we have to grow day on day, subject to subject, the way integrities are involved in law. And we have two learned speakers with Manoj Anand ji. He has already been, we have heard him before as well. And is an IP as well. So the intricacies of insolvency and bankruptcy code, it's indeed a need of an hour. And as far as income tax is always a welcome topic when we discuss income tax and especially search and survey. That's really nice. And I welcome on behalf of Agra branch and CP committee, each one of you present here. Thank you. Divyangana ji, your audio is on.
Hello. Thank you, Ashish ji, for enlightening us on CPE learning. We now invite the Secretary of Agra branch of CIRC, CA Deepika Mittal, to introduce us to the first speaker of today's session. Welcome, Deepika ji.
Thank you, Divyangana madam. Speaker CA Manoj Kumar Anand is qualified chartered accountant, insolvency professional, and associate director in renowned company. Till date, he handled 19 large assignments as IRP, RP, PG, liquidator, process advisor. In his CA practice, he is doing audit and income tax cases up to IT-80 level, mainly for national level corporates. He has co-authored book on valuation. He is also visiting faculty at various seminars held by ICAI, ICSI, CBI, etc., and regularly writes articles on IBC and income tax. Welcome, sir.
Thank you very much, Deepika ji, for such a nice introduction. Ashish ji, I'm also thankful to you for providing me opportunity. In fact, I'm thankful to the CP also that they have provided me the opportunity to interact with my professional colleagues. In fact, मेरे जितने भी seminars होते हैं, in all those seminars, I treat it as an opportunity for me to learn. Reason for that is very simple. When I need to deliberate on something, I need to prepare for that also. In that preparation, I enlighten myself and I learn also. And the most effective part in any seminar is at the fag end when we have a question answer sessions. That really the increases our knowledge, because questions are really good for us also, and sharing platform with professional colleagues and sharing our thoughts with them and having their thoughts also is there. Okay, I'm allowed to start my presentation.
Yes, sir.
Can I? Yeah.
Yes.
I'm sharing my PPT. Yeah, my today webinar is on Insolvency and Bankruptcy Code 2016, whereas I be speaking on a given topic, and this webinar has been organized by CPE Committee of ICAI. My timings are 4 to 5:30. I hope I'll be able to complete it within this time. Okay, before I start my seminar, I would like to address you on two angles. One is that seeing the audience therein, mainly audience there will be chartered accountants, but I have prepared my PPT for a particular class of CAs also, who are IP practitioners also, because a lot of CAs have also diversified like me into the insolvency professional work also. And similarly, but at the same time, some basic things, what this IBC code is there, what regulation is there, which I be discussing in detail, that I also be sharing with my another professional colleagues also. For example, I generally ask questions from many audience that why this IBC is called as a code, not as an act. If we see, generally, we have a Finance Act, we have a Custom Act, we have a GST Act, we have a lot of other acts only, like Income Tax Act, like Partnership Act. Because reason for that is that this particular IBC was formed by codification of lot of laws. The objectives of this particular code was that if you see that India and certain other South Asian countries were known in the whole world कि यहाँ पे अगर आप एक बारी किसी को पैसा दे दो तो पैसा आपको कभी वापस नहीं मिलता. And this was really, have virtually downgraded our international rating. Just to get rid of that particular phobia in the minds of foreign investors, what government came out is that they came out with the IBC code in 2016, which means codification of all the laws which deals with recovery. It deals with recovery like SICA, like SIRFASI, like certain provisions of Income Tax Act, like certain provisions of Insolvency Act. All these have been codified, and that is why IBC is known as Insolvency and Bankruptcy Code instead of being as an act or something else. One thing, I was just, our PM was abroad in G20 meetings. He also used one word, that one earth, one health mission for the all. Similarly, IBC also like a code where the objective is to have recovery for anybody who has lent money to anybody. This is my small introduction, because many times my audience asks me to have your contact details so that they can knock me later on also. Everything is there. This is a simple disclaimer. Okay, now come to the topics assigned to me. I have been assigned topic amendment to CIRP and liquidation regulation as on 30th September 2021. CIRP stands for Corporate Insolvency Resolution Process. And liquidation process, we all understand when a company goes into liquidation, then it is called liquidation. And CIRP stands for Corporate CIRP process. This particular CIRP is dealt in part 2 and chapter 2 of the IBC Act 2016. And liquidation process is immediately after that, that is in chapter 3. And very recently in the month of March, pre-pack insolvency has also been introduced. That is in short known as PRIPR, pre-pack insolvency under chapter 3A. That is, by having a lot of subsections in section 54. I have divided these topics into these two following agendas. Part 1. Part 1 deals with changes in a CIRP regulation as on 30th September 2021 notification. CIRP is a very, very vast topic. But I be dealing, just for this, since I have been assigned 1.5 hours, I be dealing only with the amendments done by notification dated 30th September 2021 in CIRP. Here, I have included in it also discussion paper on COC guidelines. COC being Committee of Creditors. Committee of Creditors is like, what do you call it? IRP, if you compare it with the Companies Act, IRP is like a single board or single board of directors. COC is like, the people who are controlling the RP. And COC basically consists of all the financial creditors in proportion of their share in the whole committee. Changes in liquidation regulation as on 30th September 2021. Here one more notification came out to be there. That is notification for electronic platform for hosting liquidation action. This has been done first time, and I be practically seeing to it how we can put our data or our auction details therein, because it's very important and it has been made mandatory now by the IBBI. IBBI is Insolvency Bankruptcy Board of India. This is basically, controlling authority of IBC, controlling authority also, implementing authority also, and the working independently. Changes in the CIRP regulation as on 30th September 2021. there are 8-10 changes. IB first of all briefly looking after these changes, and then we shall discuss in detail also why these changes were prompted and what effect these changes will have, and why how we can expect that IBC will be more effective after these changes. There has been insertion of sub-regulation 1E in regulation 17 to provide for the first time code of conduct of committees of creditors. Committee of creditors is one of the very big pillar in whole IBC process. If we see IBC, there are basically information utilities, there are valuers, there are IPs, and there are committee of creditors. Till date, there was some regulation, some controls were there on all others, like on information utilities also, on IPs also, and on valuers also. They were having their own code of conduct or guidelines, but there was nothing in the committee of creditors. And in fact, if we see the IBC, the genesis of IBC was BLRC. BLRC was the report, bankruptcy and legacy report for insolvency. And BLRC report, when it came before 2016, when this IBC was enacted, it never envisages that there will be any control required on the COC. Next is there is an insertion of subsection 4A and PRISO after regulation 36A subsection regulation 4. This is with reference to expression of interest by correlating its modification with initial expression of interest and allowing modification only once. Insertion of subclass E and B in regulation 39 sub-regulation 1A to provide that RA, a resident applicant, can be allowed to modify registration plan only once and may also provide a challenge mechanism like Swiss challenge to enable resident applicants to improve their plans. What Swiss challenge method is there? That we shall also see it in detail. Insertion of subclass 1B and After that, another subclasses A, B, and C in regulation to put time, person, and contents of notice restricting as per section 36B, section 30, subsection 2, and regulation 1 of regulation 39. Don't get confused with these regulations. This is only preamble. I'll let you know later on that what these regulations are meant for and what changes they're bringing. Now let's see the detailed analysis of insertion of sub-regulation 1A in regulation 17 to provide for the first time guidelines code of conduct for the committee of creditors and member of the committee. Let's try to underline two things: committee of creditors and members of the committee. Committee consists of all of their members. What existing regulation is? Existing regulation 17 deals with IRP duty to file report holding for COC bidding. Insertion of subsection 1A regulation 17 to provide for the first time guidelines for the committee of creditors. It states as follows: the committee and members of the committee shall discharge functions and exercise powers under the code and these regulations in respect of corporate insolvency resolution process in compliance with guidelines as may be issued by the board. I just clarified that till date no guidelines have been issued. Only thing is, no guidelines has been issued, but discussion paper dated 27th August 2021 was issued by the IBC-IP, and hopefully it happens with this is a practice with the IBC-IP that they firstly, whenever any major changes there, they firstly issue a discussion paper. Against that, they do, ask for some comments, and based on those comments, they go for amendment. Presumably also that if I'll be consuming another 15-20 minutes on this particular amendment because this is very material amendments, and hopefully the discussion paper which they have shared with public, and I think the last date was 17th of last month, whereby they have asked for the comments and people have submitted their comments, and what that discussion paper says. Because all the amendments expected to be therein shall be based on this discussion paper. What preamble of this discussion paper is? IBC initiates market-led solutions by professionals and COC. All stakeholders must be regulated. Stakeholders being the persons who are interested. They consist of financial creditors, operational creditors, and workers, and workers also, and IPs also, and IBBI also, and all others also. IP is valued, IU are regulated, but no regulation for COC. As I told you earlier, IBC in 2016 includes BLRC, never felt the need of it because COC was basically lenders and it was expected that they will fulfill the IBC objectives being value maximization and timelines. I must share it with you that when IBC came, as Indian rating was quite downdated, and reason of that downdating was that as I told you earlier, that it was felt in the market that if you give the money in India, it's next impossible to recover back your money. But bringing of IBC, because it came in 2016, and in 2017, if we remember that GST also came, bringing of these two laws, uplifted the credit rating of India by 30 to 35 points, which was an history in the whole world. And objective of IBC was value maximization of assets and timeliness. Why value maximization was objective of the IBC? Reason for that is when IP is appointed, his objective is not to recover the amount and give it to the creditor. His objective is to what the underlying asset, whatever are there in the with the CD corporate data, that should be recovered to the maximum possible extent. And everything should be done within timeline. Timeline is a very strict there. Regulation 40A is there, which prescribes within what time you are supposed to do, and courts are very strict. Whole IBC process are expected to be finished within 180 days or 270 days, or later on extended to 330 days. And the timeline and value maximization are two biggest ingredients of IBC. Yeah. we're talking about what discussion paper said. COC action on many cases are found determinantal to the IBC objective. That is value maximization and timeliness. Courts puts in place creditors and controlism from existing debtors in control. What creditors and controlism is that if you see other Sarfasi and other earlier laws, in that case, if any financial creditor has to recover money from the corporate debtor or a company, then he he has to, he is absolutely dependent on the management of the company or CD only. But IBC brought sea change. What is that? The moment an application is accepted under Section 14, moratorium is started. When moratorium is started, immediately an insolvency professional is appointed, and existing debtors are virtually made nullified. All the powers are taken out. The board is not suspended, but powers of the all debtors are taken out, and all those powers are transferred to the insolvency professional who run company as a representative of adjudicating authority, which at present is NCLT. And this is a very, very big change. Now, earlier, ownership has been changed from debtor to creditor. These are some of the basic things I would like to share, although it is not part of my presentation. So that people who are not doing IBC practice, they should also understand what COC is. COC composition is, as per Section 21, subsection 2, consists of financial creditors only. As per Section 5, subsection 7, except of related parties. And as per Section 5, what related parties are there? It is like what we do audit and have ES 18 in our accounting standard 18 there. It's similar to that, approximately similar to that. Related parties. FCAs are assigned voting share in proportion of voting shares. If there is no financial creditor, then top 18 operational creditors constitute COC as per Regulation 16, sub-Regulation 2. COC pursues resolution, evaluates the best resolution plan, and circumvents liquidation in the best interest of all stakeholders. एक हमारा जो IBC का प्रेम्बल है, उसके अंदर ये भी है कि company should not go into liquidation. इसके लिए resolution आना चाहिए. This we have been taught in all our training, and as an IP, whatever assignments I do, it is also my desire that companies should not go into liquidation. There should be either some settlement or some resolution plan should be there, so that company should remain alive. I remember the words of Moka Padyaji, he our past NCLAT chairman. He says कि company जो है, एक अगर ये इसको हम एक body माने, तो इसके अंदर जो IP का काम है वो ये है कि पहले इसके अंदर कोई और मैनेजमेंट थी, यानी he's been to say that कि पहले इनके अंदर कोई और आत्मा थी, अब उस आत्मा को आपने चेंज करके एक अच्छी आत्मा के अंदर ला देना है, ताकि ये बॉडी फिर से बहुत अच्छी हो जाए, फिर हेल्थी हो जाए और वेल्थी हो जाए. Another thing is that COC becomes the custodian of public trust and emerged as most powerful entity stakeholder. Custodian of public trust. Reason for that is that mainly, if you see practically, most of the COC consists of public sector banks who have lent the money and whose money has gone into trades. And when the public sector banks say, so whatever money is there, that is public money. The decisions of COC are affecting the whole IBC ecosystem. The decisions of the COC were so important that it affects the, as I told you earlier, whole body, whole corporate debtor, and many people who are dependent upon that particular body, like we have arms, legs, and all this thing, and whatever our body functions, that really affects them. If anything goes wrong with any of the stakeholders, for example, I just give you an example that many a time in the registration plan in the initial days, a lot of haircut between financial cutters and operational cutters used to be very different. If the company was not in a position to pay to their financial cutters, they were given a say haircut of 60-70% or 20-30%. At the same time, OCs were given a haircut of 90%, 95%. It was prevalent in the market. But this decision making power was with the COC only, that consisting of financial cutters. IRP, RP also works under the guidance and supervision of the COC. Yes, that is why the role of COC is very important. Role of COC becomes vital in timely and successful completion of the whole IBC. Even certain powers of the COC has been recognized by the apex courts, our Honorable Supreme Court, in the case of Swiss Rebel, Innovative, and Insart Seal, that the powers of commercial wisdom, it can't be interfered by the NCLT and CLAT, meaning thereby that even if they take any commercial decision as a commercial wisdom, even courts can't interfere. They have to separate in total. Just see the kind of power with the COC. No, it says that power abuses and absolute power abuses also. What experience we were having of approximately 5 years of doing IBC, 2016 में ये start हुआ था, 2021 आ गया है ये, approximately 5 years, that the COC has passed commensurate with its responsibilities. COC is so powerful that they can give haircut of any magnitude to any or all of the stakeholders for avoiding liquidation, to choose the best action plan against recovery from assets and assets of debtors. Now, personal guarantee has also been started. So, if there is any leftover amount which they have recovered from the financial creditors, they have recovered an amount from the CD and there is any leftover amount, they can file suit under Section 95 against those personal guarantors also. Generally promoted are the personal guarantors. Resolution plan can restructure the whole business. This requires tremendous commercial wisdom. Even judiciary acknowledge the prerequisite of all these parts with COC to fulfill IBC objectives. No, when they were having so much power, they were having so much detailed things with them, then their role was coming under scanner. Because let's see it in broadly, and then we'll see each point in detail. Is COC able to fulfill objectives of IBC, being timeliness and value maximization of as tighter and control? Is COC able to take care interest of all the stakeholders? Had COC kept own self-interest above IBC and floated underlying code read with relevant rules and regulation? Had COC forced IRP, RP to do things not wanted by the court? Had COC paid prompt fees to professionals like IRP, RP values as per the terms of appointment? The answer is mixed, yes or no. If I see myself doing all this practical assignment, in most of the cases, I was very comfortable with the COC, except 1 or 2 cases. Or even in that 1 or 2 cases, most of the committee members were helpful, but except one of the other member. Now let's move to, since we have learned what are the role of the COCs there. Now let's understand what are the essential features of COC. COC is a new institution, creation of IBC. This way I already talked. Still evolving to understand its role. Part-time, what practically is happening is that all these COC members, if we see they are the part-time working for most of the COC members. Basically, what happens that either EGM cadre or chief manager cadre or GM cadre, depending on the intensity of the involvement, are taking care of corporate debtor as member of COC. Lack decision making in COC meetings. Eyebrows raised in capacity and conduct of the COC. Powers used or abused under following circumstances. RB point for replacement from on panel under section 22 or section 27. Treat RP as recovery agents only. RP to seek approval for certain actions under section 28. Access term and term finance limit for that related party transactions, delegation of authority or details, etc. Basically, these are the powers given to the RP, but he has to do it all with the consent of the COC only. They have taken many attempts, which I be sharing it with you, which are judicially also noted. Arbitrary decision making like eligibility criteria for PRA, evaluation matrix, timeliness, etc. These are the essential feature of the COC which I've shared with you, and are they functioning? What was expecting from them? Let's see in our coming slides. Detailed reason for providing guidelines, code of conduct for committee of creditors under Section 17(1)(a). A lot of judicial pronouncements are there, which prompted them, to come up with regulation whereby some sort of control is put in place for COC. When we know internationally also, we found that some existing judicial practices also there, whereby they have been controlled. I hope a lot of IPs be working there, listening to me also. And can any IP tell me that if there is any existing restriction on COC working before this 30th September 2021 amendments? Was there any existing restriction on their working? Just share it with me on the chat box. Finally, when these 2, 3, 4 things came out to be there, then Parliament Committee report came on 3rd of August 2020 on the conduct of COC. I have some practical experiences also. I shall share with you my 2 cases which are directly correlated with the COC conduct. One is TACPRO case, another is tire rolls case. In a nutshell, the relationship of IRP, RP, or other stakeholders were sweet and sour with COC, because a lot of powers, a lot of responsibilities has been given to the COC. As a result of which, they were taking many attempts, a lot of decisions which were not as per the conduct of the expectation from the COC. I just shared one case with you. In TechPro case, I was an IRP and then I was appointed as TechPro Genius Limited case. I was an Aditi Generic versus TechPro Generic case. I was appointed as an earlier IRP, then RP, and all this thing. What happened that in this case, COC Committee of Creditors, as initially consist of, I formed it within 30 days as per the required stipulation, which was having SBI its member, one ERC, 1 or 2 other banks also. But subsequently, what happened that during my tenure as an RP, one bank, Bank of Baroda, came out with some claim. Basically, it was an order from the DRT for recovery, as a result of which I have to introduce to them as also part of my COC. And by introduction to them in COC, their share increased everybody's share. In fact, they were having more than 50% shares. They did not pay my fees. What fees was decided earlier, all other members, including ARC, SBI, PNB, and all this, they people paid, but Bank of Baroda did not pay, on the contention that fees has been determined before they are joining as a COC, and we should not pay for it. On the other hand, IBC code clearly provides that any decisions taken by any of the COC meeting is implementable and applicable on all the subsequent members. Ultimately, I was fed up by doing correspondence with all these people, and then I have to file a case against them in what do you call it, against that particular COC member in NCLT. And I remember Mr. M. Kumar was there. And he was very kind enough. When he realized this thing that other COC members have paid the fees, only one COC member is not paid the fees, they called the person, they told the advocate that who are representing that particular Bank of Baroda, that if his fees is not being paid, we shall dilute his debt and make them to go out of the COC, and shall call the concerned officer in person at Delhi also. It was a Chennai-based case in Delhi also, and see to him why some action is not taken against him. That when he spoke verbally so heavily against that particular the COC member, ultimately under that pressure they paid our fees. So what I mean to say is that sometimes you have some sort relations also, and in fact it was my I remember it was my first case any COC member by an IRP. It happened in 2018. As far as Toyer Rolls case is concerned, that I shall discuss in my subsequent slides. Now let's see detail that what basically हम आप और लोग जो मर्जी बात कर लें, लेकिन जो judicial pronouncements होती है, it has lot of weightage because it has been done with a lot of hard work and lot of listening to all the parties, and in fact judiciary has gone deadly against COC. In some of the 10-12 cases I have noted down. The first case was Andhra Bank versus Sterling Biotech Limited. In this case, what happened that we all, IBC practitioners knows that the registration plan can be submitted by only the person who is eligible under Section 29A. But in this case, although public sector bank was not there, the absconding and Section 29E eligible promoters attempted to take over the company in the guise of OTS. OTS means one-time settlement with approval of 19.32% vote share of the COC. The NCLT observed that you can read later on because I have to little bit rush also. Already 40 is there, 40 minutes are already there. Bank of Baroda versus CIRP Kumar, appellants and others. In this case also, in fact, here also, financial creditors try to gain the control of the CD, but the same person push the CD into insolvency. And adjudicating authority came very heavily on that and did not know how to do that thing. My third case is in the case of CIRP of Bhushan Power and Steel Limited. What happened in this case is that registration RP, with the concurrence of COC, paid ₹12 crore as fees for doing the work prior to the CIRP and during the CIRP against the IBM circular dated 12/6/2018, which strictly prohibits that no fees can be paid to anybody, or in fact no money can be paid to anybody before the start of the CIRP. In the CIRP of Varsana Ispat Limited, the lead FC recovered debt from company's account. Whenever CIRP starts, moratorium starts under Section 14, nobody can recover any money from the company, from the corporate debtor, unless it is part of the CIRP cost. But in this case, financial creditors recovered money from the company, and NCLT went very heavily on them and make them to return back that money. In the case of Gitanjali Gems Limited, this is also a very unique case. And FC decided to engage an entity for services during CIRP. It proposes the name of the NIP for appointment as IRP in the application. After having an understanding with him that his appointment as the IRP, he shall appoint that entity. The IRP appointed the said entity on the date of commencement of CIRP. The fees of the entity was 20 times the fees of the IRP and RP. Entity is meant to help IRP, RP, not to run the CIRP process. And fees paid to helper more than 20 times the fees of the IRP, RP is absolutely uncalled for. And adjudicating authority very heavily came on COC. In this case, delaying tactics was adopted by 3 COC member in approving the registration plan. NCLT felt so heavily, so bad about it that they referred the matter to the RBI for investigation. That's why these COC members who are public sector banks were having such a ill responsibility against that particular CIRP. Aditi Engineering and Tech-Pro Engineering Limited, I've already discussed that in this case, COC member bank did not pay his share of it, and ultimately COC has to do this thing. I think something wrong with my screen. I'm just, sharing it again. वो घड़ी यहाँ रख दे सामने. Yeah, sorry, I've come back to the slides. In case of Jindal Saxena Financial Services Limited versus Mayfair Capital Adjudicating Authority had that. This is a quite prevalent practice that whosoever COC members come there, he will say that for any decision, I record internal approvals. There were 4 financial creditors who attended the first COC meeting. The said meeting, COC did not approve appointment of IRP, as RP says 2 of the 4 financial creditors were having 77.97%, required internal approvals from their competent authority. The adjudicating authority observed that we depreciate this practice. The financial creditors banks must send only those representatives who are competent to take decisions on the spot. The wastage of time causes delay and allows depletion of value, which is sought to be contained. Another case is very interesting case, SBJ Exports and Manufacturing Limited. In this case, what happened that RP was required to have prior approval from the for extension of the CRIP period from 180 to 270 days. And COC member did not grant that approval, despite knowing that this 180 days are expiring as on 12/2/2018. Adjudicating authorities came very heavily on them and said this act is unpardonable. In case of Rajneesh Jain and Nupam Tiwari, RP and others. Now, what happened in this case was that RP has failed to perform his, duties to observe the code, the rules and regulation as enumerated in the code and CRP regulation, while conducting CRP of the reason of taking up such agenda of meeting and leading to illegal resolution of posting of BV and traders from the COC. What basically happened that some conflicting interest was there, and one portion of COC wants that another person should not come into the picture, and some BV and traders were there, and he said it is my financial debt, not operational debt. But COC did not allow RP to treat it as a financial debt. Reason for that is very simple, that if that financial debt should have been treated, then he should have also been part of COC, and existing members' power should have been diluted. And meaning thereby that for their self-interest, they indulge into wrong practice. In case of STCI Finance Limited, through this thing, in this case, we need expression of interest and Form G approval, prior approval from the COC. They did it 10 times. On the average, it doesn't happen. It has to be done one. And now after this amendment, only after once more amendment is required, they indulge in this practice for the reasons best known to them only. In case of in-capping, industries, what happened that constitution of committee of credit itself is found to be tainted, then the decision of that tainted COC can't be validated on the pretext of exercise of commercial wisdom. Okay, these were all judicial pronouncements which have gone very heavily against the all COC members, which prompted them to have a control on the COC members, and which have subsequently come after this amendment as on 30th September 2021. When we were discussing this thing, we understood that judiciary came heavily on the COC conduct. Now I thought of seeing whether there is any international practice in this regard. When I knocked into the international laws therein, I found in case of UK and USA, this practice do exist. In case of UK, what happens? There exists elaborate guidance issued by the Association of Business Recovery Professionals. It's like agencies as in India, in conjunction with the recognized professional bodies, on that might be expected from the COC. In USA also, creditors and other stakeholders play an important role in the acting as a watchdog over debtors' conduct, and the section 1102 of the US Code places responsibility of interest of these represented by the committee, but not pointed on it, on the members of the committee. Okay, as I asked earlier, now we have read that there was some judiciary was very heavily on the COC for their conduct. Some international practices are also there. Then I thought of seeing into the act and regulation, including rules also. That is there any existing restriction on COC? When I knocked everything, then I came out with one thing only, that there is an existing section on COC conduct also. What that restriction is? That restriction is as per circular number so and so, dated so and so, which clarifies representation at COC by such persons who are competent and are author to take decision on the spot and without different decision for want of any internal approval from the financial creditors. In fact, I always give my reference to the circle of this circular for all the notices, and plea with them that with all the COC members, that only those persons who are competent enough to take decision should attend the meeting. But practically, my this plea and my this saying is always kept in abeyance, and they do the way they want to do. Now let's see what is the outcome of all these things. This is what I'm just sharing with you while reading all the slides. No, let's see what this proposed code of conduct is there in the discussion paper. I just remind you that in discussion paper, word used was code of conduct, but in this amendment in the CIRP regulation, the word has been used as guidelines. So we need to interchangeably see that code of conduct or guidelines. Since the decision of the CS impact the life of the firm, it has to be fair and transparent, and there should be some accountability. It should promote transparent working. Any attempt of favoritism should be avoided. This is a summary of, it's a discussion paper is having a lot of pages on it, but I've summarized the whole thing. Promote, this is what I expected is that promote higher responsibility from COC. These are all generalized terms. Elevate accountability and responsibility, establishes broad principles that can be applied to every situation. They should have some ethical norms. It's basically, if you sum up everything, then my IP audience must be understanding that we also have a code of conduct as per first schedule of our IP regulation. It is similar to that. Now let's see. Now let's analyze that after coming of this implementation of this code of conduct based on this discussion paper, what we can expect from the COC. Hopefully they will respect no moratorium. won't indulge in, taking money out of debtor's account. Disclose conflict of interest. Here I would like to share one story with you. What happened that in the case of ERC, what a market was started developing. Now the control will be put on there. If any ERC means asset reconstruction company, and anybody can form an asset reconstruction company if with the prerequisite of having a 500 crore rupees as its paid up capital. If they buy debts from the banks, generally at a very low price, say at 10, 15 or 20% of the debt price they do buy, and consequently they become COC members also. And if they found in any of the registration plan that there is a huge difference in your underlying assets and the bid which they are receiving, in that case they always put some person maybe indirectly known to them as a buyer with 5-10% of a higher amount, so that they can buy the company and get good profit out of that particular deal. This sort of conflict of interest need to be not disclosed to the ARC. Earlier what was happening was that although RP was aware of this thing or maybe not aware of this thing, but he has no control. Now they have to declare this conflict of interest in their dealing. Not buy any asset without disclosing interest to other members of the COC. Not recover any amount from the current or FDR. Respect timeliness as per regulation 30A. Facilitate appointment fees payments of the professionals' valuers. CRIP cost reasonable. Not delay in payment of CRIP costs, including RP fees. Interim finance as required. Cooperation with IRP and RP. Yeah, these are the 5 summarized things which I found, that their commercial wisdom will be accepted, and COC function shall be more transparent. COC shall be accountable to IBBI. RP may get these relief, and timeliness expected to be adhered. In nutshell, after these guidelines or code of conduct, I expect IBC will be more effectively implemented, and whatever we have, timeliness or value maximization, it's the 2 principles or objectives that will be achieved in a more effective manner. This is all I have for COC related. And now let me come to the second amendment. This relates to expression of interest. This is, what basically was that existing regulation 36A provides in detail for invitation of expression of interest in Form G within 75 days and prospective resident applicant PRA, along with the procedure aspects of publication, etc. It also provides timeline for submission and so and so. Parallel regulation 40A, which prescribes model timeline for CRIP. All these were having a loophole, whereas expression of interest was inverted many a times, which results in increase in timelines. It's a, but PRA was always beneficial in delay of delay of accepting it, because indirectly delay is in the benefit of PRA, because COC RP shall be hard pressed on for time to to complete the whole CIRP process. Negotiation for improvement of the COC with PRA. Parachute lending, what I told you is also quite prevalent nowadays. What was happening was that when there is a difference in underlying assets and the amount proposed by the PRA, in that case, somebody will who never gave any code for the initial as a PRA, he will come out with a 5-10% upward price and say that I'm willing to put my resolution with this price, and who all of a sudden come. That is a new concept of parachute lending was being popularized or being came into picture in IBC. Now the loophole has been plugged by insertion of regulation 4A and preserved to as follows. Any modification of invitation or expression of interest may be made in the manner as the initial invitation for expression of interest was made. अब थोड़ा सा टाइम कम है, नहीं तो मैं आपको प्रैक्टिकली इससे करके बताता कि हो क्या रहा था। इनिशियल रेजिस्ट्रेशन प्लान कुछ आता था और उसकी शेप ही चेंज हो जाती थी, यानी कि अंडर द कंसेप्ट ऑफ वैल्यू मैक्सिमाइजेशन। और provided that such modification shall not be made more than once. अब इसके अंदर IBB has come out with a regulation that it can't be made more than once. पहले modification की कोई लिमिट नहीं थी, अब restriction has been put that it can be made only once. Another is that why this one has been there. We have also analyzed some situations. No response or very little response received from publication of expression of interest, whereas हमने जो एक eligibility criteria होता है PRA का, वो बहुत ज्यादा high करके रखा होता. Now in the second chance we should be can lower the restriction. To rectify the mistake, many times it happens that days वगैरह के इसके अंदर एक period होता है कि आपको 30 days का time उसको देना है PRA को अपनी bid submit करने के लिए, उसको हमने गलती से कम दे दिया, तो in that case we can correct that mistake. What will the impact on ongoing, what impact on timeline with this amendment? The timeline will be strictly adhered now, either of 180 days, 270 or 330 days. Impact on ongoing, I think restriction will apply for the existing CIRP also, meaning thereby that whatever special amounts they have received before 30th of December, only one amendment will be allowed now. Yeah, so again, here I would like to, fundamentally would like to deal with my IP brother is that if you feel that has been a change in circumstances and you have already taken two special windows, what circumstances can be changed is that, for example, in one of our case, we came across that particular CD got a particular research which is highly valuable in liquor industry. In another case, we found that government came out pronounced that some road will be passed on this particular land, as a result of which land prices increased a lot. It increased manifold, 8-10 times immediately increased the moment some road was to be passed through that particular land. In that case, but since no regulation is restricting, we can always move an application to the NCLT under Rule 11, Section 66, subsection 5. They always have a power whereby they can override the regulations. Same thing what I've already shared. No, third amendment, major amendment is that approval of registration plan. Existing regulation 3918 deals with the rejection of registration plan if it is not as per the code and regulation and not accompanied with the affidavit under section 29A and not stated to be true and correct, etc. For the regulation 36B, regulation 3 provides for submission of this plan within 30 days. But it has having a loophole, whereas it has not mentioned of its number of revisions. Practically, modification were made by repeated mails. इसके अंदर modification कैसे होता है registration plan के अंदर? PRA sends mail to us. We send mail to the COC. COC will reply to us, and then we send mail to the PRA. Even when so much time was consumed in approval of registration plan because of negotiation, even NCLT was having a very sympathetic approach because it always results in value maximization of assets. But it was having a very big one pitfall. What that pitfall was that timeline in this case always get increased. Basically issuing of a form and then accepting of a registration, it takes minimum 2 months. And if there are more than 4 or 5 approvals, then you can understand how much time will be consumed there. Now this loophole has been plugged along with allowing a mechanism to improve registration plan as follows. Modification in a registration plan shall be allowed once only. Need to prepare evaluation matrix with great care now. Now, now, what earlier formal mails and other things will be there. Now that will be cut short and more informal discussions will be there in the COC meeting. Decision making will be quick. Yes, another proviso added there is that allowed to have a challenge mechanism similar to prepacks for value maximization. What happened that earlier we were having a CRIP in chapter 3, sorry, in liquidation chapter 3, and along with that chapter 3A was added, whereas prepack was introduced. What basically difference between prepack and CRIP is that in case of prepack, we have to be an MSME, and limit therein is also reduced from 1 crore to 10 lakh rupees. Therein, there is some base resolution plan which is submitted by the existing promoters or directors of the company, and if there is any haircut to the operational cut, then that resolution plan has to be put in the public, and then have to see what it can be done. So therein, one for value maximization, there is some challenge mechanism has been provided. In that particular challenge mechanism, which is popularly known as a Swiss challenge mechanism, that particular thing has now been incorporated in CRIP also. I have prepared 3-4 slides on CRIP challenge method, but because of paucity of time, I won't be able to discuss it. I just tell you broadly what basically Swiss challenge method is that in case, for example, say there are 3-4 PRS, they have given a particular resolution plan of say 100 crore rupees, and that 100 crore rupees resolution plan shall be put in made as a base resolution plan, and against that again bids will be invited. And if there is any change, in case of PRP, the pre-pack it has been mentioned that if there is a significant change, only then it will be allowed. But in this case, no such word has been used. And if anybody comes with a higher bid, say 105 crore rupees or 110 crore rupees, then the first bidder will be given a chance that just see that this particular bid is coming out to be of this amount. Will you be interested to take this company at this price or not? If he agrees, then COC can decision to give that particular share with that price, or it can be given to the highest bidder. This is all Swiss challenge method. I'm just passing it because already 5 is there. When I see that is Swiss challenge method already used anywhere else, then I come across that in RBI also, and there are some judicial precedents also for use of Swiss challenge method. In RBI, when I found it that in case of CIRP, there are guidelines whereby you can use Swiss challenge method for value maximization. Yeah, in case of existing CRIP also. In the case of NCLT Mumbai bench, in the matter of Bank of Baroda versus Madana Industries, concerned RP used the Swiss challenge method. Court gave approval to that resolution plan based on the Swiss challenge method, and but similarly, in case of Saket Tax Dye Private Limited case, this Swiss challenge method was rejected with the reasoning by the same court that there exists no such provision in the regulation, and hence it can't be implemented. But I think this particular case will be nullified after this amendment in the regulation. Yeah. Now, another amendment is that restriction on COC for consideration of registration plan title. It has been done by inserting subclass so and so in regulation 39 as follows. Whereas COC shall not consider any registration plan received of the time as specified by the committee under regulation 36B. No parachute landing. Receipt from a person who does not appear in the final list of prospective registered applicant. Please note, now a market was developing, as I've already shared with you. Does not comply with the provision of subsection 2, section 30 and subregulation 1. Let's understand what existing provision was there. The existing provision are dealt in section 30 subsection 2. The registration professional shall examine each registration plan seized by him to confirm that each registration plan provide for that payment of the insolvency registration process cost in a manner specified by the board in priority of the payment of other debts and corporate debtors, provide for the payment of debts of operational creditors in such manner as may be specified by the board, which shall not be less than. Basically, OC को उनकी liquidation value से कम का आपको amount नहीं देना in any registration plan. जो डिसेंडिंग पार्ट 2 है, जो डिसेंडिंग फाइनेंशियल क्रेडिटर्स हैं, उनको भी उनके लिक्विडेशन वैल्यू पे अमाउंट देना पड़ेगा. Now, section has been put on the COC that they should comply and see that these sections are complied by them and along with RP. These are all the changes in what we call it in CIRP process. Now, let's move to changes in liquidation regulation as on 30th December 2021. There are not much changes, but still some changes are there. Some contributive words has been removed. Some changes in the regulation 28, sub-regulation 1 and 4 are there. Removal of word 2 contributors in regulation 2, regulation 1 EA7. Removal of word subsection 1 and 4 in regulation 2B. Substitution of under part 2 against in accordance with chapter 3 of part 2 of regulation so and so. Substitution of class A and B in regulation 31A sub-regulation 1 to enlarge the scope of regulation. Substitution of class 4 in regulation 31A to change the regulation. Substitution of proviso to regulation 31A sub-regulation 10 to change from in writing to. These are the small changes. Other changes are with reference to regulation 47, schedule 1 and format. Now let's see each and every what these changes are. What is the removal of word? Regulation 21EA defines the liquidation cost as per section 5 subsection 16 of the code. Earlier, as per subclass 7, liquidation cost also includes amount payable to contributors, and now this has been removed. Please note, contributee means as per regulation 21C means a member of a company or partner of LLP who is liable to contribute in the event of liquidation. Particularly, this situation may arise when liquidation cost exceeds liquidation asset value. Now, the money paid by them shall not form part of the liquidation cost. Removal of word subsection 1, subsection regulation 4 in regulation 2B. Before we read it, let's understand what it relates to section 33. Section 33 of the code prescribes 4 conditions when liquidation shall be initiated, and regulation 2B deals with the compromise or arrangement only as per section 33 subsection 1 and 4. What basically was there in case of compromise, arrangement and compromise, within 90 days, RP was supposed to try for the compromise and arrangement. It might have been, what happened was that he can try for compromise and arrangement only as per sub-regulation section 1 and 4, meaning thereby that if under liquidation, section 33, if the company has gone into liquidation, only as per subsection 1 and 4 of section 33, only then RP was asked to go for a compromise and arrangement. No, I think it was a drafting error. Now, this compromise and arrangement can be made under all the 4 subsections. As we know that there are 4 subsections for liquidation. Please note that subsection 2 deals with liquidation at the instance of COC, and subsection 3 deals with the liquidation when approved resolution plan is contravened by the concerned COD, meaning thereby that under all the 4 sub-regulations, if the company goes into liquidation, then we have to go for compromise and arrangement as per Companies Act. Substitution of under Part 2. Regulation 15 deals with progress report, and subsection 2E directs RP to inform AO with reference to development in avoidance transactions. What avoidance transactions mean? We popularly understand this in our IBC terminology as PUF. PUF mean P mean preferential, U mean undervalued, F mean fraudulent, or E mean exhausted transaction. These are defined under section 45, 47, 49, and 15. What existing regulation was there? It says that RP is duty bound to inform the progress during liquidation. It was earlier confined to CIRP only. Now, since PIRP has also started as Chapter 3A, now any transaction in PIRP also, that he has to also inform to the adjudicating authority. Now let's see what how the scope of Regulation 31A sub Regulation 1 has been enlarged by class A and B. Regulation 31A1 deals with advice to liquidator by Stakeholder Consultation Committee (SCC). Earlier advice was confined to matter for sale only, and now scope of advice enlarged to include advice on appointment and fees of professionals and manner of sale like e-auction, pre-deposit, earnest money, etc. Time period, etc., along with bringing in notice to the work done by him before constitution of SCC, like appointment of valuers within 7 days against constitution of SCC in 60 days. What basically is there, the scope has been enlarged, and as we know that stakeholders committee was formed in 60 days, but liquidator was bound to appoint valuers within 7 days, and if any decision has been taken by him from his appointment till the appointment of 60 working days, he is duty bound now to inform to the stakeholders committee about that. Earlier was that he was only required to inform to the stakeholders committee after their formation, nothing before any work done by him. Yeah, no, there is also some small change. This, as we talked with the stakeholders committee, here one representative of each class is there. Now, what changed earlier? What was there? Earlier, the provisions were that a person who is holding the highest value in percentage in that particular class was treated as a majority person, as a representative for the whole that particular class. Now it has been changed, and now that person present and vote will select that who will represent in that particular class to the SCC. That is the only change. Now, Priso, there has been also some change. Earlier, as per Priso to Regulation 31A, subsection 10, liquidator was required to only record reasons in writing if he goes against the advice of SCC. And now he has to mention it in the subsequent progress report also. There are small changes with reference to Regulation 47, Schedule 1, Form H. Regulation 47 amended to remove the requirements of announcement to public after filing list of stakeholders. Schedule 1 has been amended. These are very, very small changes. Nothing need to understand. If you go through these changes, you can understand yourself. That the liquidator shall not record payment of any non-refundable deposit or the fees for participation in an action under the liquidation process. That the earnest money deposit shall not exceed 10% of the reserve price. If you want to see any of our IP colleagues are really interested in understanding the relationship of stakeholders committee and liquidator, then I must tell them that they should, one very typical case, a tech pro system is going on at principal bank. They must study the adjudicating authority orders and hearing there. Then they will realize that how big need was there, with relationship with stakeholders committee, with liquidator, all these changes. Since time is short, I'm just skipping this slide. These are these, small changes in the liquidation. Okay. When this liquidation changes has also been brought after the discussion paper. When I was comparing it, discussion paper on liquidation changes with the this with the changes brought in by this introduction, I thought of, let me see whether there is any changes which were in the discussion paper, but material in respect, but has not been brought in the liquidation process. I come across only one small thing is there, which was in the discussion paper, but which has not been brought as amendment in the regulation. That particular was, it was with reference to appointment of any agent or broker for sale of assets. They can continue to be appointed. In the discussion paper, there was there that RB shall not appoint any agent or broker for the sale of assets. No, they can continue to be appointed. With consultation of SCC. This is a very big, relief for VRPs, liquidators working therein. Because selling of asset is not our domain and not our job. But it takes a lot of a time. And if any restriction should have been put on us of non-appointment of any agent or like that, then it should have been very, very difficult for us to sell the assets. But IBBI has not brought any change there, and hence we are very happy. Okay, now my last slide is, this by notification, IBBI has now created a site whereby as a liquidator, you're compulsorily required to put your all the assets which you're auctioning in that particular platform. They have created an electronic platform for hosting of liquidation assets. It is called public notice. And what steps are there? You have to now log into the IBBI site. I'm going live with it so that you can understand. Yes, please. Haji. Haji, please carry on.
Hello. Can you Priya बात कर रही हूँ? Please carry.
I'm just, sharing screen with you. Yes. Instead of going live, I'm just sharing with you. You have to log into the IBBI government in-user login. There you'll find one assignment column there. You have to add an assignment there. Then again, you have to turn back to the dashboard and select relevant CD for under liquidation. After that, you need to click on the auction notice. Window for auction notice will appear, and fill and save as draft or submit there. That's all. This is all my presentation. I hope. Thank you very much. I hope I've been able to justify my presentation. And if any question answers are there, because I was asked to keep my assignments till 5:15. If there are any question answers, I'm willing to take those question answers. Please. I move on to the host now.
Thank you, sir. There are hardly any questions till now, but people are demanding a lot about your PPT. Will that be circulated, sir?
Yeah, definitely. I shall share it with you, and later on you can distribute with all this.
Okay. Thank you, sir. Okay. So we now invite the Vice Chairman of Agra branch of CIRC, Gaurav Bansal ji, for a vote of thanks for session number 1. Welcome, Gaurav ji.
Thank you, CA Divyagna Jain. Good evening to all the dignitaries and respected members. Beating the Monday Blues, 20th VCM being organized by Continuing Professional Education Committee of ICI. I, CIP Gaurav Bansal, Vice Chairman of Agra branch of CIRC, on behalf of CP Committee of ICI, extend my heartfelt thanks to our eminent speaker, CA Manoj Kumar Anand, for such a wonderful deliberation on amendment to CIRP and liquidation regulation as on 30th September 2021. The practical aspects explained by the speaker in such a lucid manner is remarkable. Once again, I thanks to the